Hello, hello. Welcome to another episode of Solar Sales Uncensored. I am your host, Aaron Browning, and I am really excited for today's conversation with the one and only Miss Courtney Epps. For those of you that don't know her, she is a fractional CFO. She is a tax strategist, and we're really going to touch on the difference here. She is a multiple best-selling author, two of her books, More Relaxing, Less Taxing, and then What's Your Plan B, which we're going to take a deep dive on today. Miss Courtney Epps, how the heck are you, my friend?
I'm doing amazing. Hope you're doing well.
I am. I'm getting over a cold, so hopefully my voice is okay. I feel fine, which is all that matters, but the lingering effects, it is what it
Yes.
is. But I didn't want to delay this conversation. In fact, Courtney, before we jump in, you don't even know this story, and I'm going to embarrass myself, but I have to share it with the audience. I first got linked up with you. It's probably been almost 3 years now through Eric Worre. It was an online event. I think it was right when COVID just hit. You were one of the keynote speakers. Truth be told, when people talk about taxes, it is not my love language. I do not get excited. I'm just being honest with you. I'm sure you've probably heard it before.
Right.
And Eric did a lousy job promoting your session on that event. I started multitasking. I'll be honest with you. I come back. The chat was, I've never seen a chat blow up like this. Courtney this, Courtney that, Miss Epps. It was going crazy. And I said, oh my gosh, what did I miss? I start messaging all my business partner friends who were on the call. They could not stop singing your praises. And so I will own it. It was by far the best segment, and they had amazing, amazing speakers. So I wanted to first embarrass myself, and two, let you know that you stood out in one of the biggest network marketing events that I've ever been a part of. You're just an absolute rock star. If you don't mind, can you give the audience a little bit about your background and what you do, what your claim to fame is?
Yeah. Yeah. So I've been an accountant for 22 years,
Wow.
but I did not take it seriously for 16 of those. I actually tried to do everything but, which is what actually makes me a good tax strategist and a fractional CFO. And a lot of the fractional CFO stuff, I had to give that all up because our accounting practice is growing so quickly. And for those of you that have never ran a business, I probably wouldn't hire a CFO that has never ran a business either in the dirt or grown a business. It was hard for me to train people in order to do fractional CFO work. So we just started really hitting hard on the tax and the tax strategy because I can help more people that way. But I've owned insurance agencies, accounting firms. I had a really large agency when I was 29 years old, had about 2,900 clients. I sold
Wow.
that. The guy I sold it to stopped paying me, lost everything, tried not to be an accountant for at least 6 years. I did not want to be a professional because I was so scared of screwing up. And so I started working from home. I started a vinyl sign and banner company after that, and I realized the massive benefits of having a home-based business. And then someone led me down the road of going into network marketing, and I did network marketing for about 6 years full time, and then I would do accounting part time. And then I finally decided in June of 2017 that I had to focus on doing accounting full time because there was no one else that could actually teach what I knew. And so that's what I did. So we've built from a $24,000 a year company that we were doing in 2016. We're at 3.7 million today.
Wow. Ladies and gentlemen listening, I hope you heard that. You're probably having the same reaction. When I first met her on a one-on-one with my wife, within 20 seconds, I elbowed my wife and said, hire her on the spot. I just knew. It's the confidence. It's the fact that she's been in the trenches with us. I absolutely love that. So what was that like turning point for you to where you mentioned you didn't like doing what you were doing and all of a sudden
Yep.
you fell in love with it? Like what changed?
June of 2017, I spent $50 to go to a Tony Robbins event. I had not worked for 2 months. So I hadn't worked my network marketing business. I was doing a nutrition business, and I had not worked my accounting business. I just had some personal stuff that was going on, and I couldn't get out of this funk. And I went to that event and I realized I was undervaluing myself. So I was getting the wrong type of clients, and that was causing me not to be able to pay my bills like I needed to. I was self sabotaging myself because I'd lost that business. I made one wrong decision and sold it, and I screwed myself over. I realized I had massive limiting beliefs that I didn't know how to get to $100,000 a year. I didn't know how to get to $1 million, and nor did I believe I could do it. But one of the things that Tony said, you are a failure. If you continue to allow yourself to be a failure, you'll always be a failure. And I'm like, man, that's some stuff. Because I thought by not trying again, like I wasn't going to fail. And I'm looking at my kids. I have 6 children. they're now 21 to 10. So 21, 20, 19, 18, 16, and 10. And I'm looking at my kids like going to McDonald's, buying. And my daughter just said this morning, Mom, like we had to go to McDonald's and we had to eat. And we got 8 cheeseburgers because there was 8 of us, and we would get a large fry, and we would get 3 large $1 drinks. And I looked at that. I just told my staff that this morning, and I'm like, I realized what failure really looks like. It was not attempting. And so the other thing that I realized is because I was in a deep state of depression, and I realized that you get to choose. You get to choose whether you're happy or sad or miserable. It's all about the emotion that you put into whatever is happening to you in your life. And if you could choose to be happy over being sad, why in the hell would you ever be sad? And came out of that event, and I actually grew. I doubled our practice. We were doing about $7,500 a month, which was not enough to make it. And I didn't really have a plan at all from July, which was the next day, from July to December. And the year before that, we'd only made like $17,000 in that 6-month period of time. And I'm like, I don't know what in the world we're going to do. But I came out of that event, and I'd had a couple of appointments of people that asked me if I would meet with them and talk to them about fractional CFO work. And I ended up getting all of those clients. It was $6,500 a month.
Wow.
So I shifted my mindset at that point and went there. And then, so I did that for about a year, and I was a fractional CFO for about 12 companies.
What does that mean for someone brand new to this?
So a fractional CFO is just somebody that helps you stand alongside you and helps you run your company. The benefit of being a home-based business owner, network marketer, you don't need a CFO. Like, you just need to go sell. You don't have to do all the things that most businesses do. But I had 12 of these companies that needed me to stand alongside them, make sure their books were up to date, look at their budgets, help them run their company, and give them ideas on what they should do or shouldn't do. And I was doing really good with that, and I really loved it. But fast forward that a year, I was listening to a webinar by Grant Cardone, and this 360. I just got back from an event for Grant Cardone this past weekend, and I was able to tell him, have a conversation with him and say, look, man, like, I listened to your $49.95 webinar, and I was on my way to Tampa, Florida. This is crazy because I had a whole bunch of clients that needed legal services. And so I was upset about a company that I was going to sign up for, and I couldn't get the licensing and all this stuff, and it was just too much work. And so I found another company that was doing kind of the same thing. And I had a meeting with the owners of the company. And so I was going to sign up for this network marketing company. I was driving to Tampa, signing up, meeting with the owners of this company. I was going to do network marketing part-time, and I was going to do my accounting practice full-time, because that was the idea. Like, I was always going to do that. That was always the goal. Me and my husband had that decision made. As soon as you get to a point where you're making at least 10 grand a month from the accounting practice, you can go do what you really love to do, which is network marketing.
Love it.
So I'm on my way to Tampa. I'm listening to this little webinar by Grant Cardone, and he says the average household income in America makes $60,000 a year, and they'll pay $14,000 this year in taxes, and their take home is $46,000. And what's left over is they've got to pay for their cost of living, and $53,000 a year is the cost of living. And that means that the average household income in America is going to go in debt $7,000 a year to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation.
Say it again, louder for the people in the back.
Exactly. So the average household in America is going to go in debt. It's actually $12,000 this year. Statistics have actually gone up, but it's $7,000 a year to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. And I just happen to be in a spot where I'm an accountant, right? Not even a tax strategist at this point. I'm telling people what to do, but I'm not charging people on what I was teaching them how to do, other than CFO. I didn't even know to book tax strategy sessions or anything like that, because that was unheard of in the accounting industry. People don't teach you how to free up money in taxes, because we don't learn how to free up money in taxes. We don't even have a class on how to free up money in taxes.
Nope.
Heck, we only have one class on how to prepare a tax return by hand. Nobody does that ever. So I heard those statistics, and I just happened to be in a place where the year before I had done, or my years of being involved in home-based business and network marketing, I did over 900 tax returns of people who were W-2 employees before. And then they started their home-based business. And I knew that I could save on average of $4,000 to $8,000 a year in taxes for a person, for a family, for a household. And I'm like, man, so if the average household is going in debt $7,000 a year, and I can save them $4,000 to $8,000 a year by having some sort of home-based business and taking what they're currently spending money on today, not extra money, just what they're currently spending money on, and I can help convert that into business expenses as opposed to living expenses. We're just redirecting the money. Now I'm saving them $4,000 to $8,000 a year. So I literally turned the car around because at that point it was an ethical thing that there is nobody else. Like, Courtney, if you sign up for this one company, no other company in the network marketing world is going to have an accountant telling them, look, you're actually need to find a home-based business. You need to stay in it long enough to win for the tax benefits alone. And then if you just do a couple of things that I tell you to do to get money in tax savings, save money in taxes, now you'll start making money. And then from there, once you start making money, I can teach you how to keep more of that money.
Love it.
And so that was my aha moment, that I couldn't do network marketing anymore, that I had to go alongside network marketers and actually start sharing that story. And I picked up the phone and I called 7 network marketers that I knew that had 10,000 plus people on their team. I reached out to them on Facebook. Hey, can I call you? I got an idea. Can I just get some feedback from you? And 6 of them told me, yes, you can put this content in front of my team. And the 7th one is not even in network marketing anymore. All the rest of them are doing amazing. But the 6 told me yes. And then that led me to actually my first speaking engagement was for Les Brown.
Wow. One of my all-time favorites, by the way.
Yeah. That was the first speaking engagement I ever had was for Les Brown.
By the way, audience, she's name dropping, and this is facts. Like, those are the people she hangs out with. Just got done hanging out with Grant, spoke at Les's event, Eric Worre. I'm just blown away.
For those I'm on Tony Robbins. If you look up Tony Robbins and Courtney Epps, you'll find me on his website.
Yeah, you are a badass. Like, you absolutely are. You said a bunch there. And one of the things that I've known you now long enough that I've heard you say it a whole bunch of times. So the average person who starts a home-based business, you're going to be saving them on average between $4,000 and $8,000. I want to make sure I heard that correctly.
Yep. And the reason why it's 4 to 8 is because it depends on your tax bracket.
Okay.
Obviously, the higher the tax bracket, the more money you're going to save in taxes. And it's not on things that you're spending extra money on, because all you have to do is get involved in the company. And I would suggest go to a continuing education event. Be like me. Yep. We went from making $7,500 a month and not knowing what we were going to do the last 6 months of the year to making $400,000 a month. And that was an event, right? That was, obviously there was other events leading up to it, but when you go to events and you get the knowledge I think a lot of it's like on stage, you look at people and you're like, man, if they can do that, like, I'm so much better than they are. I should be making that kind of money. Or you look at it and you say, if they can do it, I can do it too. And you get around, just like being in a room with people who are making more money than you.
Yep.
It does something to you mentally. And I did that this past weekend, and I'm like, shoot, like I'm thinking small. Like I committed to a $50 million company. There's nothing new about a $3 million company. We already did that, right? Now I need to be a $50 million company. It's funny.
Yeah, your circle matters. It really does.
Yeah, it does.
And obviously the people you're bumping shoulders with, I can see that. So back to that 4,000 to 8,000, because I'm sure there's people in our audience who are thinking about, do I get started in solar? For one, make sure you're joining a solar company that's 1099, so you can actually utilize a lot of the stuff she's going to talk about today. But I want to make sure people who are sitting there on the fence weighing the option, do they have to be like a rock star in the company to get that 4,000 to 8,000?
No, you just have to attempt to earn an income. And so the IRS, actually, the attempt per the IRS is 3 to 5 days a week for 45 minutes a day. Oh. And here's what I tell people: find something that you can open your mouth and talk about. Like, I don't really care what that is. Yep. If you can open your mouth and speak, or if you're a millennial now and you can use your thumbs, then you can message people. For me, it's if I'm going to sit down and have a conversation with someone, if I just tell them what I do, and in a matter of 3 to 5 minutes, and I'm done with that conversation and we go back on to our meal or whatever else, then I'm now being able to write that off as a tax deduction. But I attempted to earn an income, and my intention is always to make money.
Love it. Love it. I want to be clear on that because obviously I know that. I think many people are like, oh, I got to be Courtney. I got to be Aaron. I got to be so and so
No.
for this to work. No, it's an attempt. Like asterisk that word, highlight it. And I absolutely love that. Something else you said in the beginning, I want to make sure we're clear with everybody. What talk about tax strategist? Like, what is that and how does that differ to everyone else in this space?
Most people are dealing with tax preparers. You have
Correct.
a CPA,
Yep.
or you think CPAs are like the most amazing things on earth. They are not. I would just tell you, like, let me just break down first what a CPA is and what a CPA is not. A CPA is not someone that's typically going to save you money. And the reason why is because they abide by
Mm.
something called a circular 230 rule. And a circular 230 rule means that you cannot be overly aggressive with a tax return. And if you are, you can lose your rights to ever file a tax return. And it's a state board. So you can only typically operate in the state that you work in or you live in. And so I'm an enrolled agent. An enrolled agent is the only credential you can get with the IRS, and I actually have the ability to go to tax court with my clients. So that's not something a CPA can do. So it's almost accountable as a tax lawyer. Obviously, I don't go to tax court very often. Don't plan on going to tax court. Don't want to go to tax court, but we have the ability to be able to do that. And the only difference is I have same hours, right? I had the same education. But I didn't want to work for a CPA for a year. You have to work for a CPA for a year in order to, even if you pass all four parts of the exam, you have to work for someone for a year.
Wow.
Courtney Epps is not working for anyone.
I
Period.
love it.
I
Love it.
work for my clients, but I'm not working for, not having somebody tell me what to do. And so I'm an enrolled agent. And what I do as far as the tax strategy goes is my job is to figure out how can I take what you are giving me and how can I tell you, okay, we need this more in deductions, right? I'm not just taking your information and saying, okay, let's hope for the best that this works out. We're trying to find deductions that you missed. We're trying, like by doing bookkeeping, we are then in turn structuring you properly so that you can keep more of your money. If someone is structured as an S corporation and you're paying yourself more than 20% of your net income, you're paying yourself too much. And so that now you're overpaying in self-employment taxes, you're overpaying in the pass-through entity deduction. So we're just looking at your situation and trying to figure out how can we allow you to keep more money back in your pocket. And a lot of times, if any person who gets on the phone with me that happens to book a tax strategy session, they're like, I want to save money in taxes. And I'm like, are you a business owner? No, I'm not a business owner, but that's first. Like
Yep.
you got to find something to attempt to earn an income so that you can free up money in taxes. And then from there, we can do other things. We can, as you make more money, we can do conservation easements. We can do natural gas. We can invest in things that give you tax deductions. Don't invest in 401ks, 403bs, SEPs, and simples. I'm just telling you that right now. And you can book a tax strategy session and ask me why. But that's not where you're going to get massive wealth from. And that's not a good way you don't want to defer taxes. We want to eliminate taxes.
Love it. Ladies and gentlemen, I hope you're taking notes. I hope you're picking it up. I'm falling in love all over again. By the way, this is uncensored. So I'm going to be honest. And if I ever talk too much personally about stuff you've done, tell me to be quiet. I don't want to get in trouble
You're good.
with anybody. My wife and I were overpaying ourselves.
Yep.
So when I hired her, that was one of the first things we had to go back. I think it was 3 years retroactive.
Yep.
The other thing too with tax strategy that comes to mind when I think of you, and honestly, this is how I introduce you to anyone that I care about that's a business owner. It's proactive versus reactive.
Yep.
Like that is it. Like honestly, if you ask that is how I sum you up. Her and I with my wife, we're meeting, I think it's quarterly now. We're planning ahead for the next quarter versus at the end of the year, did I do everything right? That's the way I've run my business for the last 20 years. Never again. Like never again. So that alone, I think is just having you in my corner, having you as part of my inner circle. I love it. It's freeing. So literally, thank you for that. You just do an amazing job. Let's talk about some common write-offs, deductions that home-based business owners get that they might not be aware of. Your top 3, if you don't mind.
So one, hiring your kids is the biggest one for me because I
Love
have
it.
so many kids. I got 6. And this year you can actually pay your children to work for you do anything that you would get someone else to do. So if you're not good at marketing online, then get your kids to help you market online. Get them to help you clean up the house. Get them to clean up your swimming pool. Get them to events. One of the things I think that I'm most proud of, and for those of you that know Eric Worre, maybe your team, a lot of
Oh, they
people
do
on
for
your team
sure.
know. I got invited. I was the only person that had ever got invited to speak at Beyond Leadership alongside Eric Worre.
Wow.
And he'd had this event for 10 years. And so I always take one of my children with me to events. And so I took my son Wells with me to this event. He was 16 years old, just turned 16 at the time. And he's sitting beside me for the 2 days. I did my piece, and we get to the last day, the hot seat day. And Wells is one of the first three people that walks up, and he sits down right in front of Eric Worre in front of a room of 6 and 7 figure income earners. There's about 200 of us in the room. And he says, I want to be like my mama. I want to be a speaker, and I want to know what it's going to take. I know I'm only 16 years old. I want to know what it's going to take in order for me to be like her.
Wow.
And the things along the way, like my kids have seen us really suffer and try to make business and make wrong decisions and things like that. But he had the confidence to go in front of a room full of people to think, these are my peers. Like, they're no different than me. And then just go sit down and say, this is what I want to do. So Eric spent about 20 minutes with him, talking to him and telling him how to get there and what he needed to do. And he didn't need to worry about the fact that he was 16. He was going to make it work. And, that being able to take my children with me to events, I will take them as personal assistants. And so they'll go, and not only are they working for me, but they're learning, right? They're sitting right beside me. They're getting the same information that I'm getting, and then they walk away. So all of my kids have been to Tony Robbins events, every single one of Tony's events. So they have been engulfed in that, but I've also paid them to work for me. So you can pay them $13,850 a year.
Okay.
You don't have to pay any taxes on it. Now, you probably want to contact us to help you set it up properly. You can't just transfer money into their bank account. There's some steps that you have to take, but you have to process payroll tax returns, but it's $500 a year for us to do all the work. And then it's going to save you about $5,000 per child per year.
Wow.
So that's a huge tax deduction. No taxes. If they're under the age of 18, there's no unemployment taxes, no FICA taxes, no state or federal taxes that they have to pay.
What's the legal precedent for the age you can start?
Correct. So the precedent it's held up in court as 7. Okay. But obviously you can pay your kids to be models. I tell people, if you're going to pay them under age 7, probably pay them half, like $7,000 a year. Okay. But if you can pay your children to model and take pictures and post those on social media, so you're growing your organization, you can pay them the $13,850. You can pay them more than that. The only reason why I say the $13,850 is because that's the standard deduction this year, and they don't have to pay taxes on any of that money. They don't have to file a tax return, and then you get to claim it all as 100% tax deduction. So that's one.
By the way, that was one of the first things outside of amending our previous 3 years because we overpaid. Yes. That was one of the first things we utilized. Now, both of my boys, through Courtney, they're paying for their sporting events. They're paying for field trips. It's freaking amazing. Love it.
Yes. And one of the things that we are starting to add, we actually are starting an insurance division here in the office. Because
of course you are.
Yes. Yeah. My son is he's going to be taking over that division. I'm super excited about it. We probably send $50 million a year in insurance and financial stuff that people should be doing. So we're going to start doing that here. But anyway, I got blown away yesterday. I was going to set up a life insurance policy for my kids. All of my kids, I wanted them to have a life insurance policy, not a Roth. A Roth is fine, but to me, a life insurance policy is more beneficial because they can carry it with them. And it was like, we're putting in $5,000 a year for the kids, and they're going to get a $300,000 life insurance policy. Wow. And then after 10 years, we don't even have to fund it anymore. It'll fund itself. And then they're going to have several $100,000 as they can, because it's going to continue to build, and tax-free, no going through probate, none of that stuff. And so I'm like, man, we really have got to start synchronizing, doing like paying the kids. Then we can take what we're paying the kids and put that into a Roth IRA. We can put it into an insurance plan, whatever you want to do with it. Or you don't have to do those two things. You can actually use that money for vacations. You can use it for sporting events. You can use it for school. You can use it for college, whatever you want. In addition to paying your kids, if you have children that are over the age of 18, you can actually pay them for college. So you can give them $52.50 a year that they don't have to pay taxes on and you don't have to pay taxes on. You do have to withhold self-employment taxes or FICA taxes, their portion and then yours, but you still have the ability, you can keep paying them to work for you.
Freaking love it. What about grandkids? Older that has grandkids,
Same
is that
thing. So
same thing?
grandkids work as well. And here's the thing. So if you have an S corporation, and some of you may have that on here, you don't want to pay them through the S corporation. You want to pay them through a separate kids payroll. And the reason why is because anybody you pay through an S corp, you have to withhold FICA taxes because it's its own separate entity. So if you want to pay them as a Schedule C, and so we help you do all that.
Yeah, I can't sing her praises enough. That's the thing I love about her. It's not just giving us advice. She takes care of it. Takes
Yeah.
care of it. So any of you listening to this, don't go try to do this yourself. Don't go shop it. Don't go outsource it. She does it all. Like
Yeah.
she's able to set it up. She knows what she's doing better than anyone else. So just use her for all of it. So that was a big one. And obviously that's only for home-based businesses. What's another one?
Yes. And then that also leads to other employee benefits. So like writing off your swimming pool.
Say it again.
your
Say it
exercise
again. I knew you were going to
facility.
say it.
So you get the ability, and this is tax code. This is straight up tax code. It literally says that if you have employees and you allow them to use your facilities, which is a golf course, a tennis court, and a exercise facility, or you can use it as a pool, a swimming pool. If you allow them to use your property, you can't discriminate between your employees, but if you allow them to utilize those facilities, then it's 100% tax deduction. Huge deal. Like we have probably a $250,000 swimming pool. We bought a house last year. The pool came with it. It was expensive, but I can now bonus depreciate that swimming pool at $250,000 and write that all off. Then we took a building. We were going to actually relocate our office to our home because I was trying to get back to a home-based business as hard and fast as I could.
I bet.
And the staff didn't like it, so we're still in our 6,000 square feet. But I took the building that we were going to relocate everyone to, and we turned that into an exercise facility and a game room. And so all of our employees have access to it, and none of them use it other than our children for the most part because it's far away. And we have it on our property. So that's super important because we have a home-based business. We call our home-based business gurus, and we utilize that from the house. I have kids that work at my house. I have kids that work here, and we allow them to utilize those facilities. And because of that, it's 100% tax deductible. Now, here's the kicker. If you don't have kids and you allow your team or you have reps that come, people that are attempting to get in your business or potential customers, if you allow them to utilize your facility, then you can write off a portion of your game room, your amusement or the gym, the tennis court, the golf course. Those can be written off based on business use percentage. So if you were to use it 50% for business use, you'd be able to write off 50% of that. So that's a huge deduction in itself to be able to take advantage of either on the employees level or being able to use it for business use of home.
So big. By the way, because of this years ago, that's the reason we're now getting a pool is because of this. It made it more obtainable, more affordable. I just love it. What about solar? So if we call them a seller on our team with our company, if they actually go solar themselves, is there anything we can do in terms of marketing? Because now it's a sign of their house. They're having people over. They're showing people. Any added benefits?
You're already getting the deduction for solar, which is what, 26% this year?
30.
30. Okay. Yep. I thought it went down to 26.
It did. They bumped it up to this year to 30.
Okay. So you're getting 30%. You could, because that's a credit, that's bigger than an actual tax deduction. So you wouldn't necessarily be able to write off that. Now, if you were to spend money, because that's already, you would be double dipping. So you're already getting the credit on your personal tax return. So you wouldn't get a tax deduction because you're already getting that credit, which is higher for the most part. Most people are not in a 30% tax bracket on federal. And then on state, they're getting the same benefit. I think almost every state. But if you were to spend any money on any sort of solar websites, if you spend money on a monthly payment, then all of that would be a tax deduction for you.
Okay, so the business expenses, like for our company right now, it's $85 a month to keep the websites, all that sort of stuff. All of that you can do.
Correct. And any money you spend in advertising or marketing, Obviously, that's going to grow your business if you're advertising and marketing. And then from there, that would all be 100% tax deductible as well. Obviously, not necessary when you're doing a home based business. A lot of people get started and they don't spend any money
Yep.
on advertising or marketing. But let's face it, if you want to really pound it and go out and start building a business, you're going to put in the effort and the energy in order to do that. If you treat it like a business, it'll pay you like a business. If you treat it like a hobby, it's going to cost you money.
Love it. Love it. One other thing too, and I skipped on this, but I want to come back to it. And by the way, please, I don't not want to get in trouble. Our first strategy call that Courtney, my wife, and myself did, she speaks the same language. It was very short, very direct. Asked her a couple questions, instantly knew that she was the boss. And I said, dude, go do your thing. I didn't call her dude, but I did now. And she said, give me your last 3 returns. Let me see what I can do, and we'll circle back.
Yeah.
And so I looked at my wife and said, cool, send it. It's whatever we paid for it. Let's just go have her do it. Yeah. Thinking, it was almost a posturing, if I'm being honest, like, what's she going to find? Our last accountant, CPA, was amazing. Can I say how much you saved us?
Yeah.
Okay,
yeah,
I just make sure I don't get in trouble. It was over $150,000 that our last person missed. Like hopefully you see why I had her here today. That is huge. I used to dread tax time. I look forward to our quarterly review calls now because it's creative. We're strategizing. There's a reason behind the madness. So for all of you, and I think we have a special deal right now for anybody that wants to get in contact, they can schedule a strategy call just like my wife and I did with you. Correct? Is that right?
Yes.
Okay.
Yep.
And how does that work? They would use the link that we're going to give them. They hop on that call. Do they need to prepare anything else they need?
Yep. So they'll upload, you can upload the 3 years worth of your last year of your tax returns. And what I do in that call is just go back and try to find everything we possibly could. Are there missing deductions? Were you structured improperly? And guys, if you've overpaid a lot in self-employment taxes and you had an LLC in those years, then we can go back and amend up to 3 years and get that money back that you overpaid. It may take some time. And for Dora and Aaron, I'm sure for a while, they're like, there's no way in the world the IRS is going to ever send me this money. And they were shut down. I think we did all of this stuff during COVID and nobody worked. None of these people worked at the IRS. So it took quite some time, but we got all that money back. And so now the IRS has taken about 4 to 6 months to amend tax returns.
Yeah. And by the way, during that time period, I think there's still one we're waiting for. It has nothing to do with Courtney and her team. They've been great. It's the climate we live in. I now look forward to letters, or I call them letters, checks from the IRS. That's right. Like we get notified, we're running to the mailbox. 3 years ago before Courtney, that was not the case. I was hiding from it. I wanted no part of it. That's the power of it. I'll make sure we throw the link on there. And anything else you want to add that perhaps I didn't cover?
I think, so we talked about 2 tax deductions. I think the third one, and to me, I think is one of the most important, is continuing education. Is going to events and spending money. Now, you can write off your meals, you can write off your cell phone, you can write off your internet, you can write off your travel. You can take your family with you. And I'll maybe give it an example. I think it works really well. If I pick up the phone and I call Aaron and I'm like, Aaron, look, I'd love to share something with you. Let's go to lunch. Now, could I share that information with Aaron on the phone? Sure. But if Aaron's visual, it's going to be really hard for me to do that. I like to meet people in person. I still like to have conversations and sit down. But even more than that, I like tax deductions. So I'm like, man, it's tax deductible for me. Let's go have lunch. I'm paying. And so I pick up I go and I get in my car and I drive to Aaron, wherever he's at, or I fly to Aaron. Both of those are tax deductible. And this year it's 63.5 cents per mile that you can write off for having a business, or you can do actual expenses. So actual gas, actual oil changes, insurance, all that good stuff. So I get in my car and I drive to Aaron. I sit down and have a conversation with Aaron. I tell Aaron what I'm doing. I tell him, look, man, because this is what I believe the network marketing industry does. So when someone asks you what you do, let me just tell you what you really do in the network marketing space. You are providing a service at wholesale versus retail. So it's direct to consumer. And then from there, you are providing people with a way that they can make an extra stream of income while you're making an extra stream of income, and you can do that together. And the third part about that is providing a way for people to free up $4,000 to $8,000 a year in taxes while you're doing the exact same thing. So it would be selfish for me not to think that you, Aaron, want to save money in taxes. because I think everybody hates paying taxes, right? I had to pay $7,000 last year on my $3.5 million, 3.7 million, and I was very upset. I was extremely upset. It's the first time I ever had to pay taxes. So it's like, I'm like, seriously. And I had to give $6,000 to state. And I'm like, oh my God, that was $13,000. I was pissed off. Like, I was really pissed off. And so I didn't plan enough. I should have done some more. I don't know. Maybe that wasn't too bad, but I was very upset about it. Let me just put it that way.
That's what I love about you, though.
Yes. And so I'm having this conversation, and Aaron looks at me and he's, Courtney, I'm pretty sure you're going to hell or jail. And I'm like, Aaron, what part, man, did you not comprehend about the fact that I'm providing a service at wholesale versus retail, providing a way that you and I both could make some extra money? Because we're friends anyway. We like hanging out with each other. We get to go on vacations together, do all these things together. We can both make money, and then we can both save money in taxes. What part of that did you not comprehend? And you're going to look at me and you're like, what do you mean? Because I had this conversation with you. I don't care if you join me or not. That's irrelevant, man. I didn't even think you were going to join me because I didn't think you had the money. But you know what? I told you what I was doing. And because I told you what I was doing, I get to now write off this meal that I'm paying for. I can actually afford to pay for it now because I'm not paying so much in taxes. And then from there, are you getting to write off your meal, Aaron? No. Okay, great. And then from there, I'm going to get back in my car and I'm going to get back in my Range Rover, and I'm going to write off everything to do with my Range Rover because I use my Range Rover in order to talk to you about this business. And then from there, I'm going to call you on my cell phone. So now I get to write off my cell phone. I need my internet in order to run the business. So I'm going to use my internet and I'm going to write that off. Then I'm going to write off part of my house. Aaron, do you get to write off your house? No, you don't. Okay. So then, Aaron, here's the next step. I'm going to hire my kids to work for me. I was paying them money anyway to do nothing. I'm going to hire them to work for me. I'm going to give them money. And then I don't have to pay taxes on that money, and neither do they, to the tune of it's saving me $28,000 a year, Aaron, in taxes by hiring my kids. And then from there, now I get to ride off my swimming pool because I hired my kids. And then I get to take my children with me to continuing education events to meet people like Les Brown. My son has met Les Brown, Eric Worre, Tony Robbins. He's not met Grant Cardone yet. That will happen.
It's coming.
All of my kids. And now they're learning from the greatest of the great who have more than I do, who I want to strive to be like. And they see that situation, and 100% of it, the continuing education, the travel. I typically will spend 2 or 3 days on the front end with my kids at an event, or 2 or 3 days on the back end, doing whatever it is that they want to do. We get to write off all of that. And then from there, Aaron, guess what else? Because I have a home-based business, 100% of my medical bills and 100% of my medical insurance is tax deductible as a business expense because I've set up a system in place, an HRA in place in order to write off all of those. So at the end of the day, you're making money as an employee, you're paying taxes. You have no options on how to lower those taxes. And then you buy some of your needs and your wants. But for me, as a business owner, because I made a decision, because I made a commitment to do something, to attempt to earn an income, to tell you what I'm doing, I now get to make my money. I get to buy the things that I want and I need, right? A lot more than you do because you're paying more in taxes, even if I'm making the same amount of money. And then from there, what's left over, that left over, I'm now paying taxes on. So which one would you rather be? Which system you want to be in?
It's a mic drop.
Drop the mic.
100%. 100%. I love it. You're passionate about it. You're treating this thing like a business. You're educating people. You are the real deal. I'm going to make sure I throw the link up there. And I think we even have a special rate. Is it, I don't want to say the number. How much is it for someone to book that strategy call with you?
It's $99. It's
$99. Guys, gals, $99. $99 to have someone go take a peek at this. She's gonna, the other thing I said, hopefully you don't, this doesn't offend you. She has to earn your business from that call.
Yep.
That's the goal. Like she's not, $99 is nothing to her. She's going to go through your last 3 returns, whatever you upload, and find the holes. And I promise you, I don't care how good you think your person is or people, she will find them. This is her specialty. This is what she does. She won't even help someone unless they own a home-based business.
Yep.
That's
right.
it. Courtney, I can't say thank you enough. You are the real deal. I am grateful to have you in my corner. I appreciate you taking time from your really busy day job to come spend time with our audience. I can't thank you enough. How do people find your books? How do they get in contact with you outside of the strategy call?
So my website is otbtax.com. Obviously, you can buy my books on Amazon, but
Awesome.
You can go to OTB Tax. You'll find our books. We have a membership. You can book a tax strategy session, but use that link that Aaron has sent so we know where you came from.
Love it. Love it. And once again, I'll throw that in the podcast description, also on the YouTube channel for those of you that prefer to watch it. But Courtney, once again, thank you from all of us. If you guys got value, and I know you did, I have a feeling I'm going to go ahead and say it and offend a lot of people already. This will be the #1 episode we have done so far. I guarantee it. Please like, share, review. We do this from contribution. That's the only reason. Once again, Courtney, thank you so much. I'll talk to everybody soon.